So, as I say, this became something of a discussion on Twitter yesterday, and two of those protagonists join us now. Ashraf Laidi, Chief Global Strategist at City Index, and also with us from New York, Boris Schlossberg, Managing Director at BK Asset Management and a CNBC contributor as well. Gents, I enjoyed our chats yesterday, and thanks for picking up on my original comment. So, look, we had Barclays, UBS, and then Independent Strategy were the three firms that came out and said towards the second half of the year we could see this trifecta happening. Boris, how plausible is that from where you sit?
I think that's definitely the current trend that's going on in the marketplace. Everybody picked up on this note, mainly because the divergence between the euro and the S&P has really accelerated. And I think there are a lot of reasons for it, but primarily the key reason right now is we're entering into a phase what I call every man for himself environment, where every government, we used to, after the 2008 crisis, most of the global central banks and most of the global governments kind of came together and coordinated policy, both fiscally and monetarily. Now everybody's following their own different path, and I think that you're seeing that kind of divergence that's going on. Now, the dollar supercycle, the king dollar thesis, rests, I think, on a very interesting idea. Basically, there's a virtuous cycle in the U.S., that U.S. economy is now becoming the engine of global growth, and as U.S. economy continues to expand, yields are going to improve for the right reasons. Yields are going to go up because growth is going up, not because of inflation. And that was going to create more capital flow towards the dollar and more capital flow towards U.S. equity assets. And so you see this kind of a trend that has not been in place for the last 4 years, where the U.S. dollar and U.S. equities could go up in tandem. Whether that's going to be the case still remains to be seen. I'm a little primarily the main reason I'm skeptical is because I see the biggest risk in the U.S. economy, not economic but political. As everybody has been talking about the debt ceiling crisis, that's going to be the really next big hurdle that we overcome. If that passes without much problems, then I do think that thesis could be very real. If we get into a situation where we have massive standoff and that creates essentially a second stall in the U.S. economy, then I think that thesis could go out the window.
Ashraf, we have been here before with this.
We have been here before. I'm looking at all these analysis, and I feel like I'm in January 5th, 2012. So many smart people said the dollar is going to go up, the yen is going to, the yields are going to go up, and the stocks are going up because of the cyclical advantage driven by the U.S. That didn't happen. Here is what I think this trifecta could actually happen, but for a brief period of time in the second half. It would happen whenever you will see some hawkish minutes from the FOMC. Several members, whether that in English means one or two, don't want to extend the asset purchase until the end of the year. That might be a good boost for the dollar. It might be good for yields. But in the currency market, there is something called the dollar, and the dollar does not move in itself against the yen, which this thesis is going to go up because of the Abe story and because of him forcing the Bank of Japan to go more of a reflationary trade. But what about this thing called the Eurozone? There is a very good chance that Greece growth is going to hit positive. Not because there is a great improvement, but because of what we have here in the UK, because of the comparative aspect, a quarter against quarter. Italy might hit also positive. So, and then there is also the possibility that the credit rating agencies are going to start to upgrade one of the peripherals. When that happens, the euro is not going to tell the US dollar go ahead because of the trifecta. The euro is likely to cap those dollar gains. So the thesis sounds good. It makes perfect sense, but it does not behave by itself, and I think the euro is going to try to spoil that story.
Boris?
Yeah, you know, actually, on a very near term, I think dollar-yen is grossly overbought. If you look at dollar-yen on technicals right now, for example, only 3 or 4 times over the last 5 years has it been at these high overbought levels where the RSI was above 75. And every time it corrected. Now, it doesn't mean that I think, you know, the rally is over, but I think we definitely have a reasonable chance here. We're probably going to try to go for a double top at around 88.40, but then we'll correct towards 85. I am still dubious about whether the BOJ is going to be able to create the kind of inflationary pressures that's necessary in order to move dollar-yen higher. And but it does speak to this whole point of what I call, you know, fracture, where every man for himself situation. Look at Abe. Abe has been the most nationalist leader that Japan has had in quite a long time, and he's following very much policies that are Japanese positive. I think what's happened over the last 3 or 4 years is Japan simply sat around on the sidelines and watched as the Fed pumped and pumped and pumped and devalued the dollar, and they couldn't take it anymore at this point. So his election, in many ways, I think, is a reflection of the Japanese saying enough. We're not going to have our your currency be devalued and us be
non-competitive
in the world.
And again, it's very important to have a discussion without ignoring this thing called the euro. It is very important what happened. After the US elections, when Obama won, you had the risk aversion trade. Stocks came down, but actually the risk metrics in the Eurozone were much better. That means bond yields in the Eurozone went up by less than the S&P fell, and the euro, in percentage terms, fell by less than stocks went down and bond yields in the Eurozone went up. That is thanks to the man that was elected the man of the year, Mr. Senor Mario Draghi, who did an amazing thing called the OMT. He was able to have a virtual easing, talking about it without actually doing the OMT, and that capped the rise in bond yields in the Eurozone, supported the euro, and that's what the main reason why the correlation between the euro and the S&P kind of weakened to the favor of the euro. And if the thing that I mentioned this year will happen, which is basically the GDP growth in Greece may come back up, I think that will be good for the euro.
Boris, response briefly?
But Ashraf, we can play the same game on the euro side, where we've heard that story over and over and over again, where we have moderation of periphery yields, euro rallies, and then we have another flare-up of the crisis. So my question is, will the Spanish be able to refinance all of their debt? Will Italians be able to finance their debt? I think a lot of the positive compression of periphery yields is already in the euro. Now, I agree with you. I don't think the dollar is going to have a massive rally against the euro unless there's a major source of friction in the Eurozone as we go forward. But I think a lot of the benefit that the euro has seen has already baked into the cake. So I agree with you that in a sense, yes, dollar could rally more against the yen than it would against the euro, but nevertheless could strengthen against both if we clear the hurdle of the political problems in the U.S.
Guys, thanks for that. Boris, Ashraf, by the way, as I say, this all started on a Twitter conversation we had yesterday after comments that I made. And I looked at your photo, Boris, and look, who's that guy on the left?
Exactly.
Right?
Exactly.
Where was that?
That was in Barcelona.
That was actually taken in Barcelona, I believe, 2 or 3 years ago. We were at a conference.
No idea who the guy on the right is. But anyway, we know the two guys on the left. Thank you both for joining us.
That's actually Todd Gordon. He's also a contributor for CNBC.
Okay. Oh, is it? Oh, yes. I hadn't focused.
He's in Money in Motion.
Yeah.
I just can't believe that they cut you out of that picture, Ross. That wasn't very nice.
They're not allowed to use, they hadn't paid to use me, and they hadn't paid to use my likeness, so you couldn't put it in. Boris, thanks for that. Good to see you this morning. Boris Schlossberg as well, and Ashraf. Thank you both. Good photo. You guys haven't aged.